and doji candlestick will be discussed. And finally, I'm going to talk about the impact of all the above single candlestick on trend reversal. Candlestick patterns have been developed in the year 18th century by Monohisa Homo, a Japanese rice trader known as the grandfather of candlestick because of his research on price pattern recognition. Later, this idea introduced to the Western world by Steve Neeson in his book Japanese Candlestick Charting Technique. Today, his candlestick charting technique and pattern is still one of the most widely used in stock market trading. In this graph, we see two candlesticks with all the information marked on the chart. The color of the candlestick represents the war between buyer and seller in Japanese ancient time, and now it is representing the war between bulls and bears. Learning how to read candlestick chart is easy. The price range between the open and close is plotted as a rectangle on a single line. Now, if the close price be above the open price, the color of the candle is green. And if the close price be below the open price, the color of the candle is red. Now, the green candle representing the increasing price, and the red candle representing the decreasing price. Now, the cycle here is for the green. It starts from here, open. It comes down to the lower shadow. It increases up to the higher shadow, and finally it closes here. And for the red one, for the red candle, it opens here. It goes up to the upper shadow. It comes down all the way to the lower shadow, and finally it goes up and close here. In this graph, we see two strong Marubozu bullish and bearish candle. The first one is Marubozu bullish candle indicated with the green color, and it is ascending candle. The price opens here, and gradually it increases and went up and reaches at the end of the day and closes right here. This candle has no shadows on the top. There's no shadow here and no shadow here, and the power of the market was on the hand of buyers. This is Marubozu bearish candle indicated with the red color. The price opens here in the morning, and it comes down, decreases, and finally at the end of the day it closes right here. So in this candle we see that the power was on the hand of sellers only. That is provided that the time frame be D1. Each candle represents 1 day of trading. In this graph we see two similar candles. The first one is called hammer, indicated with the green color. It has a long lower shadow, small body, no upper shadow. The second one is called hanging man, indicated with the red color. It has a long lower shadow, small body, and no upper shadow. Hammer candle seen at the end of downward trend. The price open at this point and decrease the price all the way till here, and then the buying price, the buyers overcome the seller and push the price back till here, this point, and past this point, and closes above the open price. And so we see the buyers has more power in the market. In order to know which direction the trend will go, we have to wait for the confirmation candle. If the next candle be green, then the trend will go upward. Now the hanging man, the price open here, and it decreased the price all the way till here, and because of the buying power overcome the selling power, it pushes back the price all the way this place and closes below the open price. So this candle is seen at the top of the upward trend, and in order to know which direction the trend will go, we need for the confirmation candle. If the next candle be bearish, the red one, then the trend will go definitely downward. In this graph we see two candles which they are similar. The first candle is they call inverted hammer, indicated by the green color. It has a small body, long upper shadow, and no lower shadow. The second one is shooting star, indicated with the red color, long upper shadow, no lower shadow, a small body. The first one, inverted hammer, which is seen at the end of downward trend, it opens right here. First it opened right here, and it continues going upward all the way to the end of upper shadow, and then pushes back by the sellers all the way to this point above the open price, and closes at the end of the day at this point. If the time frame be D1, each candle represents 1 day of trading. So at the end of the day, it closes right here. Now we see that the power of buyer it still has in the market. So we have to wait for the next candle to form. If the next candle be green, then there's a big probability that the trend will go upward. The next candle is shooting a star. The price opened at this point, and it continued going up all the way here. And then because of the selling power, the price pushes back by the sellers. It passed the open price, and it continue. And at the end of the day, it closes right here. This candle is seen at the end of upward trend. In order to know, we know that the power of selling power is more in the market than buying. So in order to know the direction of the trend, we have to wait for the next candle to form. If the next candle be bearish, the red one, then definitely there's a big probability that the trend go downward. In this graph, we see 5 different single doji candlestick. The first one is they called doji star. It has a cross shape, and the open and close are in the same level, the same place, and the upper and lower shadow are equal. And this doji represent indecision in the market. It means buyer and seller has no power or has equal power. Long leg doji, open and close are in the same place. It has an extended upper and lower shadow. This doji has a greater volatility in the market, and it has an indecision or indicate an indecision in the market. It means the buyer and seller has equal power. Gravestone doji. This doji appears at the top of an upward trend. Open, close, and low are at the same place. The price open here, and it goes up because of the buyer power. And when it comes to this place, the higher price rejected by the seller, and the seller pushed the price down, and it comes all the way here and close the candle at this place. Now we have to wait for confirmation candle. If the confirmation candle be a bearish candle, a red candle, then the trend direction will change from upward to downward. The next candle is the dragonfly doji. In this candle, we have open, close, and high at the same level. This candle appear at the bottom of the downward trend. The price open here, and it descending or decreasing the price up to here, and the lower price rejected by the buyer, and the buyer pushed the price up again till here. Now we have to wait for the confirmation of the next candle. If the next candle be a bullish candle, then the price trend change the direction from downward to upward direction. And finally, the next candle is the 4 price doji. Open, close, high, and low are at the same level. This is a unique pattern signifying indecision and low volatility in the market. And so we have ultimate indecision in the market. It means buyer and seller has the same power. It is very important for the beginners to practice all the single candlestick we discussed in this video and locate them in different price charts and see the important effect that each one has in the price trend.